Good evening, students. Good evening to all of you. So, students, we will start now, students, on the capital gains revision, wherein the first and the foremost topic area which I'm going to take across would be in relation to the amendments in the partnership assessment, students. One of the very important area of the amendment, students, that has taken place and would be all in all potential likely for your upcoming examination as well. Shushmit. So let's look upon to this one by one, students. Now, first of all, students, let's quickly run through the partnership provision as we all know, which was there prior to the amendment, and thereafter, students, I'm going to connect with you the entire amendment that has taken place in the partnership assessment. Students, as we all are aware, so far as the partnership assessment was concerned, there was the old provision, what it said, many of you may be aware of it, and what is the new provision. I'll just do a very quick comparison between the two, so that every one of you are aware of this important division. As per the old provision, students, the provision was this, that if at the time of reconstitution of the firm or a dissolution of a partnership firm, if there was a transfer of a capital asset, by the firm to its partner, then on such transfer, the capital gains was chargeable in the hands of the partnership firm. That was the provision, old provision. Now we have completely a new set of provision which is there. Under the new provision, students, there are two provisions which is there. One is a completely a new provision of 9B, 9 capital B, completely a new provision. And the second one, students, is section 45.4, which actually has replaced the old provision of 45.4. The old provision of 45.4, students, is what I have told you just now. That is what was the old provision of this one, 45.4. Now, before we can start off with, students, before all of us can now start with this one, I just want all of you to read out, students, this section 9B first, 45.4 and 9B. So all of you students are going to read through this one. I'm telling you, students, by the end, now there is a very important question which is there in the RTP also. Very important question, students, in the RTP as well has been put across. Even that question, students, we are going to look upon towards the end of our session. So that is what we will be dealing with it in this context. So here in this scenario, students, all of you, first and foremost, will run through 45.4. Please read this 45.4 in this context. Just read this one out. Now read this one, students. Just read it once. Everything you will understand, students, one by one. I'll immediately will start with the example to make you understand every provision which has been there. And then finally we'll conclude with the question of the RTP which has been introduced in the May attempt. Kindly go through it. All of you through with this one? Shall I go to the next slide? Quickly, students. Amrita, Shushmit. If you are through with this reading, then I'll go to the next slide. Perfect. Then there is this, and so here, students, is about the chargeability. So what is the scenario, students? 45.4. Money. Can you see in the second line herein? They have mentioned about the money as the first case. So what has been given Vyati is money or the capital asset or both from specified entity. Now students, many of you will say, so what is specified entity? Partnership firm. Now partnership firm, students, will include also LLP. Partnership firm will also include LLP. Apart from that, students, you have even the AOP BOI giving it to the members. Okay. In connection with, students, reconstitution, students, all of you know admission, retirement. So those are the examples of the reconstitution of the specified entity. Then any profit or gain arising from the receipt of such money by the specified person. So who is receiving? Specified person. Who is specified person? Partner or the member. Then that income or the profit or gains shall be chargeable. Now whose income? this happens to be the income of the partner or the member who is receiving that particular money, or the capital asset, or the both. So that is the profit and gains of that particular person. But it is chargeable to income tax of whose income? It is chargeable in whose hand? It is chargeable to income tax as income of specified entity under the head capital gains, and shall be deemed to be the income of such specified entity of which year, students? Which previous year? This income will be chargeable. This income will be chargeable in the hands of the specified entity, Indrani. It would be chargeable in the hands of the specified entity in the previous year in which such money or capital asset or both were received by such specified person. Receipt, and not on the year of transfer. Be careful. On the year of receipt. Now there is a lot of permutation combination which is going to take place. I'll directly introduce the example, but just, and such profit and gains. Now the partnership firm or the AOP BOI being the specified entity, they will have to then compute the profit and gains arising on such payout, being the money or the capital asset or both, to the partner or the member of the AOP. So who will have to compute the capital gains on such payout? It is the specified entity or the partnership firm or the AOP BOI. They are the one who are supposed to make that particular computation of the profit and gains, and the computation would be A plus B minus A is equal to B plus C minus D. Now we will come back to this equation, students. A is equal to B plus C minus D. But before we go to this equation, I want you to read it for the last time. This next new section 9B. New section 9B, students. Just read it once. And how much you will have to read, students, in this context? Read it this much. Read it this much. Till this much. Start reading from the heading and you let me know, friends, and thereafter immediately I'll introduce the example. Immediately after this I'll introduce the example. All of you through with this one, students? Now one more thing, students. You just sit with book and pen, because the example which I'm going to give it to you, you will have to take a note of it. You will have to take a note of it. And after you are done with this important session, on the day of the examination, students, the entire revision will boil down to only one case study. On the last day of your revision, it will boil down to only one single case study. That's it. Your entire revision will be done. 15 minutes. Examination day, you will give only 15 minutes for all analysis that we are doing. Let's have a look. It's only the understanding part is a critical one. I just want all of you to understand it properly. And once that is done, you are done with this. Students, this 9B talks about income on receipt of capital asset or stock in trade. So capital asset and stock in trade both is covered. Received by whom? By a specified person. Who specified person? Partner or a member of an AOP BOI. So by a specified person from the specified entity. Who is a specified entity? Partnership firm or the AOP BOI. In connection with dissolution or reconstitution of such specified entity. Dissolution, students. Even this is covering dissolution. Tell me one thing. Was dissolution covered in 45.4? the previous particular provision that you have read of 45.4, was the dissolution covered over there? To that the answer is no. Dissolution was not covered in the previous provision of 45.4. So dissolution is only meant for the purpose of this section 9b and not for the purpose of 45.4. Now please pay attention, students, here before I make you read this particular provision. Students, why it is 9b? Please understand that they are talking about distribution of two items. One is the capital asset being distributed, and second was the stock in trade that could be distributed, or both could be distributed to the partner at the time of dissolution or at the time of reconstitution of such specified entity. So students, in that case, supposingly it is a capital asset which is distributed, then accordingly the appropriate head that will be picked up would be, the head would be capital gains. If it is a stock in trade which has been distributed, it is a PGBP which will be the appropriate head where this income will be charged. This is the reason why they have kept this section 9b before the start of the head, that let's first identify the facts of the question, and based on the facts then we will decide which would be the appropriate head that will be considered for the purpose of the chargeability under this particular section. The head would be either PGBP, or it could be capital gains, or even it could be both, where both of the things or the items has been distributed. So let's have a look over here. Where a specified person, again you know who is a specified person, receives during the previous year any capital asset. So again, receipt is the case. Now students, be careful. Received during the previous year any capital asset or stock in trade. Now stock in trade is also used over here, which is not used in 45.4. In 45.4, it was only the money or the capital asset or both that was being covered for the purpose of chargeability. But here it is capital asset or stock in trade which is distributed to the partner or the member of the AOP. That is what is sought to be covered in section 9b. Now, capital asset or stock in trade or both from a specified entity in connection with dissolution or reconstitution of such specified entity, then the specified entity shall be deemed to have transferred such capital asset or stock in trade or both, as the case may be, to the specified person in the year in which such capital asset or stock in trade or both are received. So again, the chargeability, students, the chargeability would be in the previous year in which the capital asset or the stock in trade has been received by the specified person. Now, in this case, students, always keep in mind, this section 9b talks about the chargeability in whose hands? The chargeability under 9b will be attracted. The chargeability in 9b also will be attracted in the hands of the specified entity. In the hands of the specified entity. Because, what is the reason why it is chargeable in the hands of the specified entity? Because the specified entity has transferred the capital asset or stock in trade to whom? To the specified person. In what context it has transferred? The transfer is in the context of the dissolution of the firm or the reconstitution of the firm. In this context, that the transfer has taken place, and because of that transfer, the chargeability is attracted in the hands of the specified entity, that is the partnership firm or the AOP BOI, as the case may be. Again, I am repeating, friends, partnership firm will include even the LLP. Partnership firm will include also the LLP. Is that clear to all of you? Now, many students are thinking, sir, if it is a reconstitution, then don't you think that there's a double taxation that is taking place in the hands of the specified entity? To that, my answer is no. Many students say, no, sir, it is happening. Please see once again, reconstitution is covered in 945.4 also. Here also it is covered, and both of the section are talking about chargeability in the hands of whom? In the hands of the specified entity. So there is a double taxation. Just relax, students. It is not the case. I'll prove it. Don't worry. At the start of it, you are unaware. But I'll prove it one by one that there is no double taxation. Are you ready for the example, students? Are you all ready with your pen and paper? Ready with this? Perfect, friends. Then let's get started with the first example. Example number 1. Harshita. Example number 1. I'll take the first example to be that of dissolution. Dissolution of partnership firm. Now, in this dissolution, partner A has received from the firm. What partner A has received? So, partner A has received from the firm two things. One is SIT, stock in trade, and second one is land. Second one is students' land. Okay. Thereafter, the cost is say 3 lakh rupees and the fair market value is 3.5 lakhs. The cost of the stock in trade in the books of the firm is 3 lakhs and the fair market value is 3.5 lakhs at the time when it was being given to the partner. For the land, students, say the cost is rupees 25 lakhs. Now, considering, students, it is a long-term capital asset, I'll just give you ICOA also. ICOA say 40 lakhs. Considering it is a long-term capital asset, the index cost of acquisition says 40 lakhs. The fair market value is say rupees 1 crore. The fair market value, students, is say rupees 1 crore. So, what happens now? If this is the case, be careful now. If this is the case, students, then the chargeability in whose hands, students? In the hands of the partnership firm being the specified entity. Okay. In the year of receipt. In the previous year of receipt. In the previous year of receipt. By the partner. In the previous year of receipt by the partner, students. In the previous year of receipt by the partner. Okay, now here the amount, students, as you can see, is 50,000 rupees. Now this chargeability would be under section 9B, read with section 28. 9B read with section 28. And here the amount, students, is rupees 60 lakhs. LTCG, 60 lakhs. 1 crore is compared with the index cost of acquisition. So the chargeability is under which section? Is under section 9B. Read with, shall I write 45.4 over here? The capital gain section to be referred over here. Should I be writing 45.4 in this context? Answer to that is no. 45.4 we have seen just now is only when we have discussed about something on the reconstitution of the firm. This is a case of a dissolution, and therefore it is 45.1. It is 45.1. And also write in this case section 45.4 not applicable as it's not a reconstitution of the firm. All of you are clear with this one? If that is the case, I'll do the next example number 2. Every one of you are clear with this one or not? Any doubts that you have got, do tell me. Up till here, all good? Perfect, students. Let's then take up the example number 2. Now comes the retirement. Now you have to be very careful, Harshita, Yathi. Very careful of this one, because when I talk about reconstitution, both will come. 45.4 will come, and as well as 9B also will find its way. Example number 2. All of you. So retirement of partner, say here partner is partner B. Now as I told you students, in the case of retirement, what happens in this context? It will have both the section applicable, namely 45(4) as well as 9B. Both the sections will be applicable equally, isn't it? Let's see what this partner B has received. So Mr. B has received rupees 30 lakhs of money plus fair market value of a land which is of rupees 1 crore. Which is of rupees 1 crore. Which is of rupees 1 crore. Fair market value of land which is of rupees 1 crore. Is that clear to all of you now, students? Mr. B has received rupees 30 lakhs of money plus the fair market value of the land which is of rupees 1 crore. Now, if with this limited information, students, let's look upon to the taxability. First, I'll do 9B over here. 9B. Now, tell me one thing. If 9B has to be attracted, whether the money of rupees 30 lakhs which is paid, whether the money of rupees 30 lakhs that is paid, will be taken into account? Okay, by the way, students, many students are asking, sir, what about the cost of acquisition? Okay, let me give the same thing. Cost of acquisition, students, same. Write the same thing. Cost of acquisition is, say, 25 lakhs. Or the index cost of acquisition, students, is, say, rupees 40 lakhs. As the case may be. Cost of acquisition is 25 lakhs and the index cost of acquisition, students, is rupees 40 lakhs. Is that fine with all of you? Okay, perfect. So in 9B, students, which is talking about the taxability in the hands of the specified entity on the transfer of the capital asset or stock in trade, only these two is what is supposed to be chargeable. Chargeability is on the transfer of the capital asset or stock in trade. So if the money has been paid, you cannot say that the money has been transferred. Money is paid. Money can only be paid as a mode. It can never be transferred. So what could be transferred, students, is what, students? Is the capital asset or stock in trade. And that is the reason why, students, please excuse me for 20 seconds. That is the reason why. Please read 9B first. And in 9B, don't you have this concept of deemed to have transferred? In 45(4), don't you have this concept of deemed transfer? You have this concept of transfer of land or the capital asset. Now, shall I bring to your attention 9B? Shall I bring to your attention 9B? Sorry, 45(4). Read again 45(4). This paragraph only, students. And tell me one thing. Tell me one thing, students. In 45(4), do you find anywhere this concept of transfer referred in 45(4)? Please have a look quickly. In the entire provision of section 45(4) that you have read it, the word transfer, students, is missing. Do you all agree? The word transfer, students, is missing in entire section 45.4. Compare this with 9b. They have used the word transfer, and that is the reason why when Mr. B is receiving money of rupees 30 lakhs as well as the land of rupees 1 crore, so we can only say that the partnership firm has transferred the land of 1 crore, and hence the scope of chargeability under 9b, which is about the deemed transfer, 9b is all about deemed transfer, would only be in respect of the capital asset here in this example, which is the land. And in that case, students, how much is that? 1 crore minus 40 lakhs. 1 crore minus 40 lakhs. So therefore, rupees 60 lakhs is your LTCG. Rupees 60 lakhs is your LTCG. Under which rupees 60 lakhs is your LTCG in this context. Rupees 60 lakhs is your LTCG. So this is LTCG. Rupees 60 lakhs. All of you agree to this one up till here? Now comes your second point. And your second point, students, therefore is 45.4 now. Now this is in addition to 9b, then there is 45.4. 45.4 now, students, now you be very careful. Many students had this doubt that, sir, there is a double taxation which is happening, and I'll prove it to you. There is no double taxation. Please tell me and confirm if you have completed up till here. Then only I will proceed further. If you are completed, students, please let me know. Completed here? Perfect. So before we start with 45.4, okay, by the way, students, again I'm repeating, this transfer chargeable in the hands of partnership firm. In the hands of partnership firm. Don't forget that. Even 45.4 that we are going to have would be chargeable in the hands of partnership firm. In which previous year? I think previous year also you are aware of it. In which previous year that the chargeability under 9b or 45.4 will be attracted? So the previous year of chargeability would be the year in which the money or the asset or the stock in trade, as the case may be, is received by the partner of that partnership firm. If that is the case, students, let's now look upon to 45.4 and how do we compute, students, the profit and gains which is going to be charged under 45.4. So computation is given through a formula. The computation, students, is given to a formula. What is that formula? Please have a look at the formula. The formula over here is A is equal to B plus C minus D. Read, all of you. Every one of you students are going to read up till this, up to 0. Get started, students. Read it carefully, students. So students, A is equal to B plus C minus D is what? Is the chargeability under 45(4). Whereas A is nothing but the capital gains, which is going to be chargeable as the income of the partnership firm, which is a specified entity in my example. B is the money which is received, the value of the money. Because if you have seen 45(4) talks about money, value of money, capital asset, or both. So B talks about the money. C is about the amount of the fair market value of the capital asset received by the specified person from the specified entity on the date of such receipt. So received by whom? Specified person. From whom? Specified entity. On the date of such receipt. And last is your D, which has to be subtracted, and the subtraction is on the amount of balance in the capital account represented in any manner of the specified person who is a partner in the books of accounts of the specified entity at the time of its reconstitution. Now I will tell you the logic, students. Provided that if the value of A in the above formula is negative, its value shall be deemed to be 0. Fair enough. Students, now I will tell you certain things. I have to give you one more information to get started with the question. Supposing, students, just write here it, the capital balance of Mr. B is rupees 70 lakhs. This is opening. Okay. This is opening. Now you have to be very careful, students. And if you don't understand at any given point of time the application of formula, mainly you will get stuck in D, in the D part. Please do ask me. I will not hesitate to repeat it one more time. But do ensure you are crystal clear about how the application is done. Okay, just write to the question. The capital balance of Mr. B is rupees 70 lakhs opening. Just keep that particular reference in your question so that we can proceed with the solution. So here it is A is equal to B plus C minus D. By the way, students, in the RTP question, they have given you an integrated case study which will have 4 options. So there is no issue. But if it is a descriptive question which they have targeted, you will have to, if you are talking about 45(4), you will have to write this equation. If you don't write this equation, students, they will deduct you the marks. Presentation is the key. B is the value of money, 30 lakhs. C, students, is 1 crore. The fair market value of the land. And now comes the D. Be careful, students. Now comes the D. So 30 lakhs. Thereafter 1 crore. And now we will be working out D. Many will say, sir, D is 70 lakhs. You just told you. No. At the time of reconstitution, students, be careful. At the time of reconstitution, now, don't you think that there is a profit that has taken place on the capital asset which is transferred above? Already there is a capital gains, which is the profit on the transfer of the capital asset that has arisen in the hands of the firm. Yes. So there is a capital gains on the transfer of that particular land which has arisen in the hands of the firm at the time of transfer. Whereas the cost was herein. Now students, be careful. For income tax purpose, the cost is 40 lakhs, which we have taken as index cost of acquisition, and compared with 1 crore. But when you have to compute the profit on which the PSR ratio would be worked upon to understand how much is the, when you have to calculate the capital balance as on the date of reconstitution, please tell me one thing. Do you then compare the selling price when you have to compute the capital balance in which it will include even the profit share? If you have to compute the capital balance at the time of reconstitution, in the capital balance, it will also include the share of the profit. That has to be settled. Capital balance is for settlement. So in that capital balance will also include the share of profit which would be a part of your capital balance which has to be settled at the time of reconstitution. Now that profit share, when you compute, do you compute it in the accounting way, or the profit share you will have to compute by income tax? How do you compute the profit? It is the accounting profit which forms part of your capital balance, or it is the taxation profit which forms part of your capital balance? Which profit? It has to be the accounting profit. So you are always focused, whatever is a part of the settlement amount, which is the capital account, then that capital account will also include the profit share. And the profit share, students, that will be included for the purpose of settlement would be the accounting profit. And accordingly, how much is the accounting profit? So you will compare 1 crore with 25 lakhs. You will compare 1 crore with 25 lakhs. So here, for the purpose of working note, I am writing it for D. Working note I am writing for D. So here the accounting profit primarily on to the firm, accounting profit to the firm on transfer of capital asset, accounting profit to the firm on the transfer of capital asset is 1 crore minus what, students? 25 lakhs, which is 75 lakhs. But on this 75 lakhs, don't you think that the firm would have to pay the tax? Firm would have paid the tax, students. On this 60 lakhs of the long-term capital gains, how much is the tax that the firm would have paid? At the rate of 20.8%. At the rate of 20.8%, 8% means including the HEC, that the tax would have been paid. So that will reduce your accounting profit. The tax that is paid, does it reduces your profit amount? And the answer is yes. How much is the tax that is paid? At 20.8 on 60 lakhs the tax is paid. But for the purpose of simplicity, I am taking 20%. But in the RTP, they have taken 20.8%. So we will see in RTP the 20.8%. But here, only for simplicity. So the tax that I have paid is 12 lakhs. So tax paid by firm. Tax paid by firm is 12 lakhs. So tax paid by firm is 12 lakhs. Now this tax paid by firm will have to be reduced from the accounting profit to the firm on the transfer of capital asset. This tax which is paid by the firm has to be reduced from the accounting profit arising to the firm on the transfer of capital asset. Answer is yes. So on this 75 lakhs, students, on this 75 lakhs, you shall reduce this 12 lakhs which is the tax paid. So from the profit, reduce the tax which is paid. So how much is there for distribution? Rupees 63 lakhs is now there for distribution in PSR. Distribution in PSR. Now say for example, there are 3 partners. So 3 partners, equal share. 3 partners, equal share. So if 3 partners equal share, so therefore the profit post tax allocated to partner B is rupees 21 lakhs. Add to this the opening capital account 70 lakhs. So therefore the profit, the capital account at the time of reconstitution is how much? At the time of reconstitution, D, which is 91 lakhs. 91 lakhs. So capital account at the time of reconstitution, D is 91 lakhs. So 91 lakhs, therefore, students, is what has to be considered. 91 lakhs, students, is what has to be considered in this case. And students, if you see over here, come back to your equation originally. So here you will reduce it with 91 lakhs. So 30 plus 1 minus 91 crore. So in that context, it is, how much is the amount? How much is the amount, students, which is there? Quickly! It is 39 lakhs. 39 lakhs, students, which is there for the purpose of chargeability under section 45.4. Under section 45.4. Did you all understood this equation or not? First you tell me this. Did you all understood this equation or not? Okay. Now if you all understood the application, D part, mainly the D part, students, please tell me this thing before I now will explain you the logic. Many students, it depends on the question, Arjita. That will depend on the question. It can be done at any point of time. Okay. That is not in our hand. That is not in our hand. When the reconstitution is done, admission and retirement can take place at any given point of time. So therefore, that point of time, therefore that profit effect, we are giving it in this regard. The profit effect. So in the question that they will give it to you, I'll tell you this way. They will give you the capital account. Okay. That capital account in the examination question always has to be assumed to be the capital account before taking into account this particular, the profit arising on the transfer of the capital asset in the hands of the firm, which is 45.4. Sorry, which is 9B, which we have discussed just now. So obviously, whatever they give you the capital account in the examination question, what you are asking, sir, what about during the previous year, if there is any more profit? So that if they have to tell you, then they will give you directly the final answer. If what you are trying to say is this, that, sir, if the capital balance is on 1st April and the partner has retired on 30th of June. So apart from this answer of 21 lakhs that you have added, what about that 6 months profit which is also to be added? Yes, it has to be added. But in the examination, the question, they will not complicate this matter. But as a concept, that if you are asking me that, sir, from 1st April to 30th of September, if he has retired on 30th September, then there is a 6 months. For that 6 months profit share of that partner, will that also needs to be allocated to compute the D? And the answer is yes, it has to be also be allocated. But so far in the RTP of the question, they have not considered it, but only for the purpose of concept, that apart from this 21 lakhs which will be added to the capital account, if they say that the capital balance of rupees 1 crore is as on 1st of April, if that is what the question is, and they are telling you that they have retired on 30th of September, then they should also give you how much is the profit that has happened in that 6 months period, and then the proportionate profit you will then add to compute D as well. The proportionate profit you will then add to compute D as well in this case. But in the examination, if they give you the capital account of Mr. B, the retiring partner, is say rupees 70 lakhs, without telling you as on which date that particular capital account stands, if they are silent about the date, then in that case, always assume that this is the second last particular figure of 70 lakhs, and in that second last figure of 70 lakhs, you need to add to this 70 lakhs one more item of adjustment, and that is about the profit arising to the firm on the transfer of the capital asset. So that profit, the way we have worked out over here, that proportionate profit would also be added to that rupees 70 lakhs so as to calculate the D. If the question does not tell, if the information in the question does not provide you on which date the capital account balance is, and second, they are also not giving you the data relating to the in-between profit that has arisen to the firm so as to allocate the share of profit to the partner, that if information is not given to you in the question, up till now, whatever question bank which is there, that information is not given. Up till now, whatever information that has been question bank which is there, that information is not given. So if that information is not given, we will say that the capital account that they are specifying in the question is the second last item, and the last item is that profit that is to be worked out on the transfer of capital asset, the way we have discussed on that rupees 21 lakhs, how we have arrived at 21 lakhs. That profit is what has to be allocated to the existing capital balance of 70 lakhs so as to compute a D, and that D is what would be reduced from that equation, which is A is equal to B plus C minus D. Is that clear to all of you? Every one of you are clear with this one? Don't make the blunder. Students, again I am telling you, don't make the blunder of what? Reducing from this 1 crore 40 lakhs. Don't make this blunder of reducing from this 1 crore 40 lakhs. You will have to reduce the cost of acquisition, because it is the accounting profit post the tax which will finally enter into the capital settlement account. Accounting profit after the tax is what will enter into the capital settlement account of the respective partner. Capital settlement account of the respective partner. If I am clear with this, now I'll tell you the logic. What is this? Many students are still wondering, but sir, still double taxation is happening. Many students are asking this. So let me finally give you the solution. There is no double taxation. Students, there is no double taxation. People are saying, sir, why you say there is no double taxation? Now, students, 9B, the chargeability as far as section 9B is concerned. The chargeability as far as section 9B is concerned is on the transfer of the capital asset of the firm to the partner. Of the firm to the partner. Capital asset of stock in trade. That is 9B, which we have already seen. Whereas 45.4 is not in respect of the transfer of capital asset. So therefore, the charge of 45.4 is not on the transfer of the capital asset. So many students are wondering, if the charge of 45.4 is not on the transfer of the capital asset, then it is of what? Now is the answer. Students, please pay attention. Students, tell me how much is the amount that the firm is required to pay to the outgoing partner in this case, which is D. D is nothing but the amount which the firm is required to pay to the outgoing partner. And as we have calculated, the amount that is required to be paid to the outgoing partner is rupees 91 lakhs. So technically speaking, the firm should have paid only 91 lakhs. But what we are seeing is that the firm, instead of paying 91 lakhs, it is paying 1.3 crores. 1.3 crores is what is paid against what is due. Due is 91 lakhs that we have calculated, but it is 1.3 crores is what has been paid by the firm to the partner. Many students are wondering why the firm is paying more as against what is due. Why, students, get me the answer. Why the firm is paying more as against what is due to the partner? Obviously, students, at the time of retirement, in this example, there are other assets which are there of the partnership firm, which are not transferred, but which are not transferred to the partner. But don't you think that even that gets revalued? Because the partner will say that, look boss, the assets which I am not taking, even that if it is revalued in today's time, I have the share of my profit which is unrealized on those assets. I have my share of profit which is unrealized on those particular assets. Why I am using the word unrealized? Because that has not been sold. Why it is unrealized? Because that has not been sold. So as on the date of my retirement, there are still existing asset of the firm which, if revalued, goes on the higher amount, goes on the higher side. Now, though on that profit which is unrealized, my share is also there. My share is also there, which unfortunately I cannot take it because that assets are not being sold. So therefore, the firm pays more Therefore, the firm is paying more as against what is actually due. What is actually due, because the more payment or the excess payment is in connection with the unrealized profit on the remaining asset. The excess payment is in relation to the unrealized profit in respect of the remaining asset of the firm. So that is why the firm primarily pays more, and accordingly 45(4) is introducing the charge in respect of not the capital asset which is transferred. The 45(4) chargeability is in respect of the unrealized profit which is distributed to the partner. The unrealized profit in respect of the remaining asset of the partnership firm which is distributed to whom? To the partner. So the chargeability of 45(4) right herein, the charge of 45(4) is charge of section 45(4) is in respect of the unrealized profit on the remaining asset in the bracket which is not distributed. Remaining asset means which is not distributed as on the reconstitution of the firm. Just right here, the charge, students, just insert it. The charge of section 45(4) is in respect of unrealized profit distributed to the partner on the remaining asset which is not distributed. The remaining asset is not distributed, but what is distributed to the partner is the unrealized profit in respect of those assets as on the reconstitution of the firm. This is what is the charge of 45(4). So please compare this charge versus 9B, which is a charge on the transfer of capital asset or stock in trade to the partnership firm. To the partner by the partnership firm. Is that clear to all of you now? 9B is a charge on transfer of capital asset or stock in trade to the partner by the partnership firm. Is that clear to all of you? I want every one of you to reply on this concept which I have told you, the comparison now. Now, did you realize there is no double taxation? 45(4) is a chargeability on that unrealized profit which the firm has distributed to the partner in respect of the remaining asset which is with the firm as on the date of reconstitution. Whereas 9B students is a distribution. 9B students is a distribution of 9B is a chargeability on the transfer of the capital asset or stock in trade to the partner by the partnership firm. All of you are clear with this concept or not? There is one last point which is also remaining. One last point. But before I go to the last point, I just need to know whether all of you now can appreciate the difference. Because see, understand, 91 lakhs is outstanding, then why I'm paying 1.3 crores? When 91 lakhs is outstanding, Shanmati, when 91 lakhs is outstanding, why I'm paying 1.3 crores? Because this excess payment is for the share in the unrealized profit on the remaining asset as on the date of the reconstitution of the firm. The share on the unrealized profit on the remaining asset as on the reconstitution of the firm, and therefore 45.4 is attracting the charge on the payment of 45.4 is attracting the charge on the payment of such unrealized profit by the firm to its partner. Payment of such unrealized profit by the firm to its partner. If all of you are clear, Vyeti, can I then take up last 3 examples to close this concept? Last 3 examples to close this concept, students. Please tell me if all of you are ready with this one then. Last 3 examples to close this concept. Any doubt, students, please ask me now itself. There is still one point which is left. Before I put that point, let me ask you this question. Students, subsequently, take this example. Subsequently, the partner will sell this land. Subsequently, the partner will sell the land. For say rupees 1.5 crores. 1.5 crores. So if subsequently that particular partner is selling the land for rupees 1.5 crores, my question therefore to all of you is, what is the cost of acquisition? What would be the cost of acquisition in the hands of the partnership firm? Sorry, would be the cost of acquisition in the hands of the partner? So the partner has got the land from the firm on the dissolution in that example. So when he will sell that land, my question is, what will be the cost that will be taken in the hands of the partner for computing the capital gains? To that the answer is, students, 1 crore would be the cost of acquisition. 1 crore would be the cost of acquisition for the partner. And why 1 crore? Because on 1 crore the firm has already paid the tax. Up to rupees 1 crore, the charge is already attracted in the hands of the firm. Up to rupees 1 crore, the charge is already attracted in the hands of the firm. And since the charge is already attracted in the hands of the firm, therefore there will not be any further charge that will be made in this regard. I hope that every one of you are clear with this one. All of you are clear with this concept, students. Therefore, there will not be any therefore rupees 1 crore will be the cost of acquisition in the hands of the partner, because up to rupees 1 crore the charge is already attracted in the hands of the firm. Fine. Now tell me one thing, why in determining the nature of the capital asset, when the partner is calculating his capital gains, he will have to know whether that asset is a long-term capital asset or not. In computing the capital gains on the subsequent transfer in the hands of the firm, in computing the capital gains on subsequent transfer in the hands of the partner, question is, when I'm determining whether the capital asset is a long-term or a short-term capital asset, please tell me this. Will you be doing the clubbing of the period of holding? Meaning thereby, the period for which the firm has held that land will that period be clubbed with the period as held by the partner to determine whether it is long term or short term, or it is only the period which has been held by the partner that would be considered to determine whether it is long term or short term? What would be done? Whether the clubbing of period of holding, will that be attracted in this case? Whether the clubbing of period of holding, will that be attracted in this case, students? Quickly. Will that be attracted, students? You will not be doing the clubbing of period of holding for the simple reason, students, because why the clubbing of the period of holding will not be undertaken? For the simple reason that the firm has already been charged on that particular land. The chargeability is already attracted. So therefore, the clubbing is attracted when the previous owner, in the hands of previous owner, the transfer was not considered as a taxable transfer. So only when in the hands of the previous owner, the transfer is not a taxable transfer, that the clubbing of period of holding is attracted. Whereas here it's a clear-cut case that the firm has been charged on that land which is transferred to the partner, and hence no clubbing of period of holding will be undertaken in this regard. Is that clear to all of you, students? All of you are clear with this one? Perfect. If you are clear with this one, students, then the last particular point, which is the ultimate point, please pay attention. What did I told you, students? Here, please pay attention, students. This is the last point. Then we are good to practice the last 3 questions. We are done with them. The 3 question includes the RTP question. Point number 1. Please pay attention. Students, as I just now told you, 45.4 is a chargeability. 45.4 is a chargeability in respect of what? Of the unrealized profit. Is in respect of the unrealized profit distributed to the partner on the remaining asset. Unrealized profit distributed to the partner on the remaining asset. So therefore, what is happening is that there is a charge on the unrealized profit on that remaining asset, whatever is unrealized profit which is distributed to the partner. On that, the firm is already charged to tax. On that, the firm is already charged to tax now. Now, tomorrow when that asset is actually transferred, when it is actually transferred, you tell me then that profit will get realized. Entire profit will get realized, including that portion of unrealized profit which was taxable earlier. So this portion of the profit which was already taxed under 45.4 earlier, will you tax it again when that remaining asset is actually sold? When that remaining asset is actually sold, whether you will you again tax that particular portion of the realized profit which was already taxed earlier under section 45.4? Answer is no, because that will give rise to a double taxation. So what is the remedy in this case? So the remedy, students, in this case is that on the subsequent transfer of that remaining asset lying in the hands of the firm, so as and when the firm will transfer that asset, from the sales consideration, they will have to reduce that portion of the capital gains, which was already taxed earlier, so that there is no double taxation that will take place again. Because subsequently, when you actually transfer, then you will realize the profit. But in that realized profit, portion of the profit was already taxed earlier under 45.4 in the unrealized form. So therefore, when that profit is realized, so in that realized profit, this much portion of the profit which was already charged earlier under section 45(4), that needs to be reduced. That needs to be reduced. Every one of you are clear with this concept? That needs to be reduced. So please write a note herein. Write a note herein. The profit so charge the profit so charge in the bracket unrealized under section 45(4) shall be reduced from the realized profit on the subsequent transfer of the capital asset of the remaining capital asset by the firm. In the bracket, so as to avoid the double taxation. All of you are clear with this one? See, this is the concept. This is how the concept. If you understand the concept, you will understand all the provision. Otherwise, this provision is a real mess. I'm telling you, students have not understood this section at all. They have messed up the section. So this is the concept, students, which you should just be very clear about it. That what you're taxing in 45(4), is it a double taxation? What you're taxing in 9B, those things, if it is not clear to you, then you will make this big blunder of all these small points, which I'm raising it right now in front of you. If this is clear, friends, the last small point, students, if you all are clear, the last small point is this. Just now 45(4) capital gains we have calculated. And how much was the capital gains? Here that we have calculated, the capital gains that we have calculated was 39 lakhs. What is this 39 lakhs? 39 lakhs in 45(4). 39 lakhs in 45(4). Now this 39 lakhs in 45(4), friends. Please pay attention. 45(4) is in respect of the unrealized profit. Unrealized profit is a charge of unrealized profit on the remaining asset. On the remaining asset. This charge of 45(4) is on unrealized profit on the remaining asset. Now, therefore, this is chargeable as capital gains. Isn't it? Capital gains, 39 lakhs, 45(4), unrealized profit on the remaining asset. This is what is the charge, because this is what has been paid. Unrealized profit paid on the remaining asset. Unrealized profit paid to the partner. Or share of unrealized profit. Share of unrealized profit paid to the partner on the remaining asset. In a simple word, share of unrealized profit paid to the partner on the remaining asset. That is what 45(4) is. If you all are clear with this one, so therefore my last question here to all of you is this. In the head capital gains, the capital gain is never taxed as capital gains. You have to define this as a long-term capital gain or a short-term capital gains. The capital gains is never taxed as a capital gains. You have to define this as a long-term capital gains or a short-term capital gains. Do you all agree? Do you all agree to this one or not? So in that particular case, this would be long-term or short-term. This is long-term or short-term. Based on what? Based on 9B? Based on the status of 9B? So if 9B is long-term, 45(4) would also be long-term. Is that the case? If 9B is long-term, 45(4) also will be long-term. Is that the case, students? If 9B is long term, then 45.4 would also be long term. Answer is no. They are two different aspects altogether. How can you say that? If 9B is long term, then 45.4 is also long term. 9B is for the calculating capital gain on the asset which is transferred. Asset which is transferred. And whereas 45.4 is chargeability of the unrealized profit on the remaining asset. So you have to see the status of the remaining asset. So if the remaining asset is long term, then the 39 lakhs is long term. If remaining asset is short term, then 39 lakhs is short term. Because the charge under 45.4 is not on the asset which is transferred. The charge of 45.4 is on the remaining asset. So what is the status of the remaining asset as on the date of reconstitution of the firm? What is the status of the remaining asset as on the reconstitution of the firm? If as on the date of reconstitution of the firm, the remaining asset is long term, then 39 lakhs is long term. Remaining asset is short term, then 39 lakhs is short term. Is that clear to all of you students now? This is how the things has to be looked upon. And now can you understand the ultimate logic? Now can you understand the ultimate logic, students? Ultimate logic, I am telling you. No students have understood this logic. And why this logic is important? IC has asked the question in the RTP. And that question in the RTP, nobody has understood it. Now you tell me the last question then, in this case. The last question, therefore, to all of you is in this regard. Students here. Now, did you realize why 45.4 is not applicable on dissolution? Why 45.4 is not applicable on dissolution? Can you now tell me why 45.4 is not applicable on dissolution? Now you should be in a position to answer this. Why 45.4 is not applicable on dissolution? You should be in a position to answer this. Why 45.4 is not applicable on the dissolution of the firm? Because in example number 1, we have seen this was the example number 1. There was dissolution. So 45.4 was not attracted. Because on dissolution of the firm, there is no remaining asset with the firm. On the dissolution of the firm, there is no remaining asset with the firm. So if there is no remaining asset with the firm, where is the question of chargeability under 45.4? Under 45.4 in the hands of the firm at the time of dissolution. So if there is no remaining asset in the firm, where is the question of chargeability? Where is the question of chargeability in the hands of the firm or its dissolution? So on its dissolution, only 9B gets attracted, whereas in the case of change in constitution, both 9B as well as section 45.4 gets attracted. Is that clear to all of you? Yes, Harshita. Yati. I hope that every one of you are clear with this one. Now students, let me give you one last question just for the purpose of clarity. Supposingly, it is a case of retirement. The capital balance is say 91 lakhs above. Computed. The way we have computed above. Okay, which is D. Okay, and only money was paid. Only money was paid, students. Of rupees 1.3 crores. Only money was paid of rupees 1.3 crores. So the capital balance as on the retirement was 91 lakhs. which is computed above. Okay, whatever it be. And only money is paid of 1.3 crores. Only money is paid 1.3 crores. Please tell me then, if only money is paid on 1.3 crores, whether 9B will be attracted? Whether 9B will this be attracted? Please tell me. Whether 9B will this be attracted? If money of 1.3 crores is what is paid, if money of 1.3 crores is paid, whether 9B is attracted? Answer is no, because 9B is for transfer of capital asset or stock in trade. 9B is for transfer of capital asset or stock in trade. Whether 45.4 will that be attracted? Answer is yes. Why? Same question asks. Ask the same question. Why you are paying 1.3 crores? When the balance is only 91 to be paid? Because the excess is the share in the unrealized profit on the remaining asset. On the remaining asset as on the date of reconstitution. The excess is the share of unrealized profit. The share of unrealized profit on the remaining asset as on the date of reconstitution. And that is the reason why, students, that is the reason why only 45.4 is attracted and not section 9B. Only 45.4 is attracted and not section 9B. I hope that every one of you are clear with this. This is the concept wherein students are going to get stumped in the examination of the partnership assessment. If you don't understand it through logic, then this is what you will be killed in this situation. Last point, students. Now we will do only 2 questions. Congratulations, students. Only 2 questions we'll do. You'll say, sir, but you said 3 questions. I've already done 1 question. In my discussion, I've already done 1 question. I'll do now only 2 good questions. One is the RTP and another is the advanced question. Students, tell me one thing. I just told you what is the status of this capital gains. This capital gains has to be defined either as long term or short term. The capital gains of 45.4 has to be defined as long term or short term. What did I told you? If the remaining asset as on the date of reconstitution, if the remaining asset as on the date of reconstitution is long term, then this capital gain of rupees 39 lakhs is also long term. If the remaining asset as on the date of reconstitution is short term, then the capital gains as on the date of reconstitution is also short term. This is what we discussed. Let me then tell you then this point. Supposedly the remaining asset is, say, one land in Nagpur and one land in Pune. These are the 2 remaining assets. The land in Nagpur is long term as on the date of reconstitution because the period of holding is more than 24 months. Whereas the land in Pune is short term because the period of holding is not more than 24 months. So that land in Pune is short term. Now you tell me, what do I do of this capital gain? Because the remaining asset is both long term and short term. Then what do I do of this capital gains? What do I say? It is long term or short term? What do I say? Then I need to split this capital gains in a ratio. Which ratio? That we'll see in the problem. But I will have to then split this capital gain in a particular ratio so that a portion of this capital gains would be referred as a long-term capital gains and a portion of this capital gains will be referred as a short-term capital gains. So therefore, if the remaining asset comprises of both long-term and short-term, then this capital gains needs to be split in a way that a portion of a capital gains would be referred as long-term and the other portion of the capital gains would be referred as short-term. What is the ratio of the split? That we'll see in the practical question. What is the ratio of the split? That we will see in the practical question. Are you ready with this one then, students? So 2 questions, 1 question here and 1 question of RTP is what we are going to discuss it now, students. So hold your breath, students. Get ready. One question here and 1 question from the RTP. See the illustration. Illustration number 2. And read this very carefully before I put the slide down. So friends, this line is critical one for us. There is a piece of land S of book value of 30 lakhs. There is a patent T of WDV of 45 lakhs. So one is fixed asset, another is patent, which is depreciable asset of 45 lakhs, and there is a cash of 225 lakhs. The land was acquired by the firm more than 2 years ago. So it is long term. The patent was acquired, developed, registered 1 year back. Any case, it's a depreciable asset. Partner A wishes to exit. The firm revalue its land and patent based on the valuation report from a registered valuer as defined in this thing. So the valuation of 2 things has been done. Now friends, in this context, friends, now then, be careful here, students. Excellent question. And this is what ICI in their RTP question number 1 have targeted this. In their RTP question number 1, they have targeted this. So let's have a look to the question that they have targeting in this regard. So in this context, and as per the valuation report, FMV value of land S is 45 lakhs. So the book value was 30 and now the FMV value is 45 lakhs. Fair market value of patent is 60, whereas the WDV was how much? 45. Now the FMV value is 60 lakhs. As per the valuation report, there is also self-generated goodwill of 30 lakhs. So this is a third asset that came into picture. 30 lakhs. On the exit of partner A, the firm decides to give him 75 lakhs in money and land S to settle his capital balance. Assume the index cost of acquisition of land S is 45 lakhs. So they have given you the ICOA so that the for 9B calculation of capital gain is easy. Students, here just pay attention. There is land is long term or short term? Any case, land has been transferred. Land has been transferred. So they have been giving land as that is long term. There is a patent T which is of 60 lakhs. What about this self-generated goodwill of 30 lakhs, students? This self-generated goodwill of 30 lakhs, will it be long term or short term? Tell me this. How self-generated? Tell me one thing. When it got generated? When it got generated? You say that self-generated goodwill. When it got generated? It got generated when it is valued. And therefore, if it is valued on the date of reconstitution, only then it will get generated. Unless and until you do the valuation, it will never be generated. And only when the valuation is done, that the generation of the goodwill will arise. So therefore, the self-generated goodwill has arisen on the date of which date? The self-generated goodwill has arisen on the date of, indeed, the self-generated goodwill, students, has been arised on the date of. Indeed the case. The self-generated goodwill has arised on the date of valuation. And when the valuation is done, reconstitution of the firm. So can I therefore say it's a short-term capital gains? Answer is yes. Therefore, it is a short-term on the date of reconstitution. So therefore, it is a short-term item. So be careful here. What is remaining asset is self-generated goodwill. What is the nature of the self-generated goodwill? Short-term. And the second one is the patent. So patent primarily is only 1 year old. So accordingly, even that is short-term. So there are two short-term, which means whatever is 45.4 profit, unrealized profit, that you will determine on the remaining asset, unrealized profit that you will determine on the remaining asset, which is on the which profit, that unrealized profit which is distributed to the outgoing partner. So that unrealized profit which you are going to charge under section 45.4, can I therefore say the entire unrealized profit which is distributed to the partner, that unrealized profit, will it be a short-term capital gains? Answer is yes. The entire, Ranjit, the entire unrealized profit in this case will be a short-term capital gains, and that is what will be the point over here. Because the remaining assets, the two remaining assets are there. One is patent, another is self-generated goodwill. Both of them happens to be the unrealized item. Both of them happens to be a short-term capital gains. So let's start, students. 9B is easy. Students, 9B is very easy. What is 9B? So 9B is the fair market value of land is 45 lakhs. FMV value of land S is 45 lakhs, which we have got it over here. 45 lakhs minus the ICOA. How much is index cost of acquisition of land S? That is also given to you 45 lakhs. 45 lakhs over here. So 45 lakhs and 45 lakhs. The answer is nil. So therefore, the answer is nil over here. So therefore, the LTCG is nil. What is the tax then? What is the tax for here? Tax is also nil. The tax is also nil. Why this tax is so important for me right now? Because when I calculate my D on that share of profit, that share of profit, I reduce the tax element as well. Now here the share of profit is 0. Here the share of profit is 0. So therefore, here the profit itself is 0. And therefore the tax is also 0. So therefore, this will not hamper my D. So my D would be directly, students, what is your D? What is D, students, here? Who is the partner who is going, by the way? Partner A. D here is 100 lakhs. For 45.4, when I calculate, how do I calculate 45.4, students? B plus C minus D. What is the money which has been distributed? Money which has been distributed here is 75 lakhs. Second last line, 75 lakhs. So 75 lakhs is the money. What is the fair market value of the land? C, which has been distributed, which has been transferred. The fair market value is 45 lakhs. So 75 lakhs plus 45 lakhs. 120 lakhs. 120 lakhs, students. So 120 lakhs minus D. How much is D here? So D over here is 100 lakhs. What about the share of profit on that capital asset transferred to the partner? What about that? The answer is 0. So 100 lakhs plus 0. So therefore, in this case, D is plainly 100 lakhs. So 75 plus, so 120 minus 100 lakhs, which is 20 lakhs. Now this entire 20 lakhs would be a short-term capital gains. Students. Would be a short-term capital gain, students. Okay. Now, supposing, students, you should know now short-term capital gains. Why? Because this is in respect of the two assets. Which two assets? The goodwill, self-generated goodwill, and the patent. And the patent. Supposingly, students, tomorrow only goodwill is sold, or tomorrow only patent is sold. So obviously, goodwill is not sold. Tomorrow only patent is sold. So I should know, what did I told you, students? What did I told you then? Tomorrow if only patent is sold, then what did I told you? The unrealized profit would be reduced on that realized profit. Okay, but unrealized profit is 20, but this 20 is for both. 20 is for both goodwill as well as for patent. So if only tomorrow patent is sold, then the unrealized portion of profit of the patent needs to be worked out, because 20 lakhs is the unrealized profit for both goodwill as well as for patent. But if tomorrow only patent is sold, so I need to know how much from this 20 lakhs of unrealized profit is attributable to patent. So how do I know how much is attributable? How do I know? There is a ratio that I need to do. Which ratio? Let me take you through that ratio now. Ratio analysis, students. The ratio is the revaluation ratio. Congratulations, students. The revaluation ratio. The revaluation ratio, students. Sorry, here 15 lakhs. How come 15 lakhs, students? How come 15 lakhs is coming? Somewhere we have made a blunder. See the blunder. Did you realize the blunder, students? These are the silly mistakes. These are the silly mistakes which you have done it. Congratulations. Silly mistake has been committed. And what silly mistake? The D is not 0 here. Let's calculate D. What did I told you about D? What is D here, students? Opening balance 100 minus the share of profit. Now that profit is the accounting profit or taxation profit, students? This profit, the share of profit. So this plus the share of profit. That profit is we have taken the taxation profit. See the question, beautiful question. If you take the taxation profit, then taxation profit is nil. But are we supposed to take the taxation profit, or are we supposed to add the accounting profit? It is the accounting profit. And how much is the accounting profit on the transfer of the land? Accounting profit is 45 lakhs. Don't reduce it from ICOA of 45 lakhs. Because what we have made the mistake is to reduce from ICOA of 45 lakhs. This we have to reduce from the book value. And what is the book value of land? 30 lakhs. Given above. 30 lakhs. So therefore the share of the profit is how much? 15 lakhs. Is there any, from the accounting profit, is there any tax amount? Is there any tax amount, students? The tax is nil. The tax is nil. So therefore my D happens to be, simple word, students, the D happens to be 100 plus. Now this is divided by 3. There are 3 partners. 45 minus 30. Again you can make a mistake. You will take only 45 minus 30. Don't do that. 45 minus 30. This is 15 lakhs of the accounting profit. But this accounting profit is for all the 3 partners. For only one partner, Mr. A, it is only 5 lakhs then. So D is 105. So my D happens to be 105. So this D, students, is 105. So 120 minus 105 is how much? 15 lakhs. 120 minus 105 is 15 lakhs. Now this 15 lakhs is the unrealized profit on the remaining asset. Unrealized profit which is distributed to the outgoing partner on the remaining asset. Which is the remaining asset? The remaining asset is goodwill and the patent. Goodwill and the patent. So this particular unrealized profit has been distributed, isn't it? Now tomorrow, as I was telling you in my example, if only the patent has been sold, only the patent has been sold, so I need to know how much from this unrealized profit of 15 lakhs is attributable to the patent, because that much of the amount I will have to reduce it from the patent. That much of the amount I will have to reduce it from that profit of the patent on its sale, on its realization. So that much profit has to be reduced. Which ratio to determine how much of this 15 lakhs is attributable to patent versus attributable to goodwill? Which ratio, students? The revaluation ratio. Now what is this revaluation ratio? Let's have a look. It's a simple one. the revaluation ratio. So students, if you see over here 105, 15 lakhs, up till here it is fine. B plus C minus D, 15 lakhs. This 15 lakhs I need to attribute between patent and the goodwill. 15 lakhs has to be attributed between patent and goodwill. How do I go about it? Let's have a look. Students, a revaluation ratio. You will say, sir, what is revaluation ratio? Tell me, what is the revaluation amount of goodwill? 30 lakhs. Entire 30 lakhs. What is the revaluation of the other asset, patent? 60 lakhs was given to you of the revaluation amount. What is the book value? Book value is 45 lakhs. Book value is 45 lakhs. So so therefore, you compare 60 lakhs with 45 lakhs. How much is the revaluation? 15 lakhs. Whereas how much is the revaluation of the goodwill? 30 lakhs minus 0. So the revaluation is 30 lakhs for the goodwill, whereas the revaluation is 15 lakhs for the patent. Revaluation is 15 lakhs for the patent. The increase, the revaluation amount is 15 lakhs. So it is 1:2. Between patent and the goodwill, it is 1:2. So therefore the revaluation ratio is 1:2. So 15 lakhs, out of 15 lakhs, 1/3 goes for patent. So it means 5 lakhs will go for patent. This is also has to be reduced. This is what has to be reduced. Whereas 10 lakhs will have to go for goodwill. So if tomorrow goodwill is sold, then how much will be reduced from goodwill? The profit of the goodwill on realization, 10 lakhs is what has to be reduced. So 5 lakhs to be reduced from patent and 10 lakhs to be reduced from goodwill. 5 lakhs to be reduced from patent, 10 lakhs to be reduced from goodwill. And that exactly is the point. So students, you can see over here. Let's assume patent is sold for 25 lakhs. See here. Let's assume patent is sold for 25 lakhs. The WDV of patent to be calculated. Now please understand, this is a depreciable asset. Huh? So this is a depreciable asset. So if it is depreciable asset, then the block format has to be calculated. So open WDV is 45 lakhs. And thereafter, if there is any additions, you'll add the additions made during the year. Unless the money which you have received on the transfer, how much money you have received? 25 lakhs. From 25 lakhs, 5 lakhs is already being charged on, we have already calculated a patent. How much is charged for patent already on an unrealized basis? On an unrealized basis, 5 lakhs is already being charged. So now what would be reduced as a selling price will not be 25 lakhs. What will be reduced as a selling price will not be 25 lakhs, it will be 20 lakhs. It will be 20 lakhs, students. And that is this particular ultimate question, students, which is there. With that now, students, we are good to go with the RTP. Last question, students, of the RTP. And that is what, in the day of the examination, congratulations, students. On the day of the examination, you will be solving this question only of the RTP. So, because this is such a beautiful question, students, such a comprehensive question that everything is covered over here. ICI has given a master stroke of question in the RTP question number 1. It's a master stroke question, students, and as I told you, everything has been covered over here. Everything, students, has been covered over here. That's the beauty of the question which the ICI has given in this context. So let's have a look to this particular question, students. All of you are ready. Hardly will take another 10 minutes, 15 minutes, and we are done. We are done, students, don't worry. Just take 15 minutes more and we should be through. Are you all ready with this one now? RTP question number 1. Students, please keep the calci with you because you will have to calculate. I want the calculation from you because God forbid, the chances are very high that the same question will come in the exam. Chances are very high that the same question will come. So do practice once, and this would be the historical night for all of you on the day of the examination. Historical night, students. So if you see quickly, Mr. Prem is a partner of two firms X & Co and Y & Co. Now students, what is happening here is that X & Co he is retiring, whereas in Y & Co is getting dissolved. So here in the X & Co, Mr. Prem has resigned from X & Co. So it's a reconstitution for X & Co. If it is a reconstitution for X & Co, both 9B as well as the 45(4) will be applicable. 9B applicable if the capital asset is transferred. Whereas in the case of dissolution, only section 9B is what is going to come into picture and not section 45(4). And why is it so? I think all of you know the story, because there is no remaining asset with the firm on the dissolution. So there is no question of 45(4) to be applicable in this regard. Let's have a look. So Mr. Prem is a partner of two firms X & Co Mumbai and Y & Co Delhi. X & Co has 4 partners including Prem who share profit and losses equally. Mr. Prem resigned from X & Co on 1st April 2021. So he has resigned, students, on this date. On the said date, the capital balance of each of the partners stood at 32 lakhs. So each partner has got 32 lakhs, but be careful. We will have to then add to this 32 lakhs when we have to calculate D, whatever is the profit, accounting profit after tax. Students, so you will always keep in mind, because this is where we did the silly mistake. So capital account plus what? So D is what? Plus the accounting profit after tax needs to be added to calculate your D. So capital account is 32 lakhs. We will have to work out the accounting profit after tax, and that is what will fetch us D. So in order to settle the dues of Mr. Prem, the firm revalues its land for the first time since purchase. The valuer also valued self-generated goodwill. Students, 70 lakhs. So 70 lakhs would be a short-term capital gains. 70 lakhs would be a short-term capital gains. Isn't it? It's a short-term capital asset, I will say. Not short-term capital gains. Use the right word, short-term capital asset. The firm has falling assets whose details are as follows. So Pune, Nagpur, Mumbai and self-generated goodwill. So see, every assets are long-term in this case. The 3 is long-term and the 1 is short-term. All the 3 is long-term, students. And this last one is short-term. All of you agree to this one? The last one is short-term. So cost of acquisition, book value. Now the book value is important for us only for the accounting profit. For the accounting profit part, this is what is to be considered. Accounting profit part, only this is what has to be considered. Isn't it? Otherwise, this has got no relevance. Only for accounting profit and this has to be considered. Let's take it further. In April 2021, X & Company gave land at Nagpur and 15 lakhs money to Mr. Prem to settle his capital account. X & Company is giving land. So students, land has gave, Nagpur is gone. So what is gone in this context, students, is Nagpur here. So Nagpur is out from the race. Nagpur is out from the race, students. Isn't it? Nagpur is out. So accounting profit, we will have to calculate in D. This is what we will consider it. Anyway, so gave away land at Nagpur and rupees 15 lakhs money to Mr. Prem to settle his capital balance. 15 lakhs money is also been given, students, to Mr. Prem to settle his balance account. Fine, that 15 lakhs money, students, we all know how to treat this one. This money would be taken only for 45(4). This 15 lakhs has got nothing to do with 9B. 9B will entertain only the land part, but not the money part. Okay. Thereafter, firm Y & Co dissolved on 1st of March 2022 and distributed its land at Chandigarh, Mohali and Gurgaon on the same day to its 3 partners, Prem, Akshay and Arav respectively, who were sharing the profit. The particulars of these land are given as under. Now, this is very easy for us. Why it is easy? Because here we have to calculate only 9B. And 9B is simple capital gains calculation. Only a simple CG calculation. And since it is a simple CG calculation, 62 minus the ICOA of 18.4. Similarly, 59 lakhs minus the ICOA of 15.24. Similarly, 70 lakhs minus ICOA of 16.7 lakhs is what would be the capital gain. So everything is LTCG. So everything is LTCG. So ICOA of all these three, you will reduce it from this and you will get the capital gains. In addition, Prem and Akshay were given money of rupees 8 lakhs and 11 lakhs respectively on March 1, 2022. Beautiful part. Please tell me, when dissolution is taking place, only 9B happens. When dissolution is taking place, only 9B happens. And if it is only 9B that takes place, the money which has been distributed by the firm to its partners, the money which has been distributed by the dissolved firm to its partner will have any relevance at all. Will it have any relevance at all? The money which has been distributed by the firm to its partner. Will it have any relevance at all, students? Quickly. Will it have any relevance at all? While we calculate 9B, the money which the dissolved firm has distributed to its partner, will it have any relevance in 9B? I am talking about it, students. And to that the answer is no. The money distributed is relevant only when we have to calculate A is equal to B plus C minus D, whereas B is the money. And that happens in 45.4. And that 45.4 is for reconstitution and not for dissolution. And why it is not for dissolution, I have already told you the logic. So this is only to misguide your attention to something which has got no relevance. So what will be the amount taxable under 9B in X and Co and Y and Co for AY 22-23? Now students, here from examination point of view, students, be careful. In 9B only they are talking about it. They are only talking about it 9B. They are only talking about it 9B. So 9B is the simple calculation. Just now I told you 9B calculation here. How do you calculate? 62 lakhs minus index cost of 18.4. What is index cost? The CII of, multiply the CII 18.4 into CII of the current year 21-22. CII of current year 21-22, which is 317, divided by the CII of 11-12. The CII of 11-12, which is 184, divided by the CII of this thing 184. Isn't it? Same way you do all, you'll get the LTCG. And students, you will find the total LTCG in this case. The total LTCG in this case is 1 crore 8,58,000. 1 crore 8,50,000 is the total LTCG over here. And what about and what about the LTCG over here? Nagpur has been transferred. Gave land of Nagpur. Gave land at Nagpur, students. So if they have gave the land at Nagpur, so Nagpur, how do you calculate? 45 lakhs. So LTCG here I'll calculate. LTCG for Nagpur 9B. So Nagpur in this context 45 lakhs minus what? Minus 25.4 into CI of which year this is? 15-16. 15-16. So 317 into 317 divided by 15-16, 354. Can you tell me the ICO, students? Calculate quickly. You have got calci. 25.4 lakhs. 25.4 lakhs into 317 divided by 354. What is ICOA? Quickly. 25.4 into 317 divided by 254. 254. Denominator is 254. So your ICOA, students, is, you people don't have the calci now. Will you give me the answer, students, quickly? Otherwise, we'll get stuck unnecessarily. There are calculation part which I want you to solve. That's small calculation. What is the ICOA over here? 25 lakh 40,000 into 317 divided by 254. Please give me the answer, students. 0.37 is what? ICOA? I just took this, but how come this 25.4 lakhs? Can you just give me the full value, students? 25.4 lakhs. Students, if you never have to give me the answer on this one, I would not have erased this solution. Yesterday or day before yesterday, I did the Hindi class, and the students were so prompt in answering that I have worked out the entire solution over here. And here in this session, I'm not getting the answers at all. That is very bad, students. At least this is expected from you guys, that you should be in a position to give me the answer on these basic things. Otherwise, you expect me to start calculating, then this is over. You guys can work it out, the remaining particular part. This you can really figure it out. Solve it, take it as homework then. The solution, in any case, the final solution is given to you as A, B and C. So you work it out, the final solution. And we'll catch up in the next session then, Friday morning. I don't have the calci with me right now, so I'm relying on you guys. You people are not interested to, or keen on answering on these particular solutions, so be it. Solution in any case is given, the final solution, but you derive the solution then. Because I want your support on derivation of solution, because the calci should be with you. And there cannot be an excuse. See, the answer has been given to you. Please derive the solution. 5 cases are there, primarily. You all can now work it out, the 5 cases. Okay? Five cases are there here in students. Please do work it out. The 5 cases are there. This is what it is. Solution, any case, is there. Go with the same concept which I have taught to all of you, which we have done it in question number 2 just now. Refer that question, work out the solution. The final answer A, B, C and D, 5 answers has been given to you. You can easily will get hold with what would be the main answer. Okay, so the calci, students, is not there with me. I was relying on your particular solution. Any case, you are good to, any case, concepts are all done. You can easily now work out this particular solution. On Friday, students, when I'm going to meet you, morning, 7:30 in the morning. 7:30 a.m. students, when I meet you in the morning, the last session of the CG revision which I'm going to do would be on, I'm giving you the checklist, students, slum sale. Thereafter, the ULIP taxation, the slum sale. Thereafter, the ULIP taxation, students. I think only Harshita, you are there, but what about the other students who are there? Definitely there has to be other students also. The chat shows already there are other students as well who have choose not to respond. So here in students, in this context, slum sale, thereafter there is a ULIP. After this, students, I will be referring this to. And in any case, the Hindi, if you want to see the RTP, probably the solution, the workout solution, you can refer the Hindi lecture of the same YouTube video. The Hindi lecture of the same YouTube video You can easily refer it out. I've solved this entire RTP, this thing. So you can please go through this Hindi link which I've shared in my Telegram channel also, CA Durgesh Singh. So there at the end, if you see now, so those who want to get the details of the workout solution, the file solution is already given. But anyone who is keen on the detailed part of the file solution, my request to all of you would be to refer that part of the Hindi lecture which I have done yesterday, day before yesterday night, where I have worked out the entire solution because students have given me the answers. So there, students, you will get the, if you want to know the details how this particular value has been determined, so please go through that. You will say, sir, but where is that Hindi lecture on this worked out solution? The Hindi lecture is already in my Telegram channel, CA Durgesh Singh. You can refer there, CA Durgesh Singh. And please, there is no explanation to be given. There is already the solution that needs to be worked out. So you can directly refer this one. Refer that last half an hour. Half an hour you will find the RTP has been discussed. Refer that last half an hour wherein the RTP has been discussed. So in this context, students, you will get this worked out solution on these things. Check out if you guys can do it. Herein, be careful. This C is the game. Huh? Point number 2, the C is the game. Because what would be the capital gains taxable under 45.4 in the case of X and Co? See, 45.4 taxable in the case of X and Co. When we talk about capital gain, students, be careful. 45.4, it is on the unrealized gain on the remaining asset. Unrealized gain on the remaining asset. And the remaining asset, students, that you can see over here. Which is the remaining asset? The remaining asset, students, that you can see over here is the self-generated asset. Now that is short term. And the balance is long term. So whatever is the capital gains that is arrived, students, whatever is the capital gains that has been arrived under 45.4, there is a split that has to be made. The short term capital gains, 6 to 23,750, and the long term capital gain. Now the ratio, students, I have already worked out. Please go through that particular question. You will solution which has been there. In my Telegram channel, just part C, you will find the same particular thing of day before yesterday. I have put across capital gains Hindi class. There itself you will find it. This is the ratio. Short term capital gain is for self-generated goodwill. It is for self-generated goodwill, students. Okay, so that is what it is. So that is the point, students. Please kindly go through the same. Now Friday morning, students, when I am meeting you, it would be on slump sale and ULIP. This is the last session. NRI. This is the flow. NRI, FII, FII taxation, NRI, FII taxation, foreign institutional investors. Thereafter, students, there would be NRI and FII taxation. Thereafter, few exemptions. I will take important exemptions. And last would be some few practical questions on amalgamation and demerger. Amalgamation and demerger. Amalgamation and demerger. Few practical questions on amalgamation and demerger. Students, this I am going to do with all of you on Friday morning 7:30 a.m. Friday morning 7:30 a.m. This is the last. Just deal with this so that on the day of the examination, this does not bother you at all. Okay? So students, work it out, this particular part. And again, I'm repeating this. If anyone wants, the main answer is already given. But if anyone wants the detailed solution, which is there on this, how the answers has been determined, I've already worked out in the previous video of the capital gains, which I've done it in Hindi. See the last half an hour, you'll get this particular point. In any case, there the explanation is not required. What is required? What is how the figure has been determined? The figure I have written it already over there. So you can refer it. That video link is there in my Telegram channel, CA Durgesh Singh. Day before yesterday, which would mean that is on 8th. Day before yesterday would mean on 8th. I have already shared the link. On 8th of May, I have already shared that link. So you can go to the Telegram channel, CA Durgesh Singh, and refer it on 8th of May. You'll get it. Fine, students. Now, last students over here. An announcement which is there. Students, Unacademy additional month free subscription is going on all the Plus and Iconic subscription. CS, CMA, do refer this to your friend students. 6 months, if they take, they get extra 1 month. 12 months, if they take, they get extra 2 months. 24 months, if they take, extra 2 months is what they will get. And this is only till tomorrow, that is 11th. And do tell them to use the code CADS. Because through that code CADS, they will get that referral code CADS, they will get that 10% discount as well. The referral code CADS, students, they will get extra 10% discount. Tomorrow is the last day, students. Any of your friend, be it foundation, inter or final, whether it is CA, CS, CMA, whether he wants to take Plus subscription or Iconic, this is the golden opportunity. Make them count, students, in this context. Perfect, Harshita. Just go through this one, just before you sleep, just solve this question, this one, and just tally with this one. And again, I'm repeating, you will find this particular link. I've already told you the link of that video. Just compare that link with the other one, okay? Okay, one last point, students, which I'll tell you is that tomorrow night at 10:30, 2 hours case law premier video is going to be uploaded. 2 hours premier video would be uploaded tomorrow, students. So you just take the benefit of that premier video as well. 2 hours premier video, students, will get uploaded. All the case laws will be done in 2 hours time. All the case laws will be done in 2 hours time. PDF file I will also share with all of you. PDF file I will also share with all of you. Is that clear to all of you, students? Perfect, students. Then I'll see you tomorrow night and day after tomorrow on Friday for our last session on the CG revision, and we will be done with it. Okay, see you then, students. Bye bye. Good night to all of you.